the better, safer way to trade iron fly. You're also learning the number one mistake which I see everybody is doing when they trade this. Very nice. Hi everybody, welcome to the video. Today we are going to discuss one of the most popular strategy called iron fly. We're gonna address what exact mistake maximum people are doing when they trade iron fly. How was my experience with it? I'm gonna share my adjustments which I figured out working really well. It reduces the stress a lot. So it's gonna be a real fun video, and towards the second half we're gonna discuss about the VIP points, the things which you must know. So if you watch the video till the end, you are going to be rewarded with much better information, no doubt about that. Iron fly popularity and number one mistake I see everybody's making. A picture is worth 1,000 words. Make an iron fly and then I'm gonna show you what exactly this is all about. So let's make an iron fly. We have picked the March series. So iron fly is obviously we have to short, we got to make a straddle. So this is exactly what we're going to do. At the money short, both call and the put. Now obviously it's time to buy wings because the whole beauty of iron fly is that the risk always remains in control, right? So we're gonna buy wings now, and that's how we create an iron fly. Let's see how it looks, right? This is how it looks, somewhere in the middle the line is, and the maximum loss is always in control. That's one of the reasons why retail traders love iron fly. There are so many people who've been doing it for many years because of this good looking graph only. Okay, now this is the good thing. Now the bad thing about iron fly is that ask for a lot of adjustment. Now let's talk about the disadvantages. Iron fly asks for a lot of adjustments. Now which adjustment we should do which really relax us, plus do not compromise on profit so much? This is what everybody wants, right? Let's go ahead. I'm gonna go ahead by one day, and now you will know what is the number one mistake which I'm talking about, right? So let's see. It's going steady. It's so far it's fine. Now this is what you see here. What you see here is maximum people try to adjust iron fly as soon as the break even is breached. Here, as you can see now, 7th of March, right? 1 week approximately now. And now what you see is that market has come here. The green part is over. It's going into the red. So let's just quickly adjust it, right? Maximum people do this. Your condors, your iron fly, especially people who are beginning with iron fly. Let me tell you, this is not a right approach. You end up over adjusting your trade. Why should you run for adjustment? Because your losses are fixed. Give your trade a breather. Much better, relaxed way of trading. That's how it should be. Okay, so now the new rule of adjusting iron fly is figure out your premium of call and put, which comes to be approx 341. Now what do we do is we got to simply take out 20% of it. So 341 roughly, right? So here we go, 341, and if we divide by 5, it will show us the 20% value of it, which comes to be 68 points. Correct? So this rule will really calm your nerves, because we are only going to do adjustments, not looking at the payoff. You know very well, you've been watching the videos, payoff doesn't hold much of a relevance as you know it. So we are only going to make adjustment as soon as the premium of either call, either put comes below 20%, which comes to be 68 points. Otherwise we are not touching iron fly. We are not doing over adjustment. That's absolutely fine. So let's go ahead now. So far, as you can see, the premium is obviously very far from 68, so we don't have to adjust it. So let's go ahead now. Let's see a lot of learning from this, and the VIP points when I have, as you can see here now. Okay, so it's definitely much further away. Let's see. Give your trade chance to come back in profit. That's what I say. You don't need to over adjust your things. Now here we go. Now here by 20th of March, what do we see is that our sold call has come below what? Below 68, which is 20% value of the premium. Okay, so now it's 59. So now we have to do some kind of adjustments, because now, as you can see very clearly, our break even is also breached. So what should we do? Point number one, we got to make sure that if market running one way, that side we should make it profitable. Step number one, we are looking forward to book the call. Okay, this is what we should do. So exactly, we got to book it, and here we go. This is trading at 59.2. So 59.2 is an exit of the call, and now we're gonna open our option chain now. And here we go, we open the option chain, we see where the market is, here we are. So now what should we look forward to? The call we have already, booked. obviously in profit, right? So now we look forward to sell a call again, which is slightly lesser than at the money, because at the money will be very aggressive adjustments. You don't want to do out of the money as well. So slightly, so this is at the money, as you can see very clearly. So what we're going to do is we are going to short the call. Okay, we're going to short the next call, the same call, okay, which you booked. You're bringing it, towards where the market is. When you do something like this is how your adjustment looks. Your payoff looks very handsome, right? Because market tends to trend. So if market trends, there's gonna be a good profit to be made at Iron Fly. You know very well the margin requirement is in Iron Fly is very tiny. It's one of the most economical strategies ever. But one issue which popped up here is that if market suddenly gives a reversal, then there is a big massive loss. Now I know what everybody wants who's watching this video currently. You want your profit to be there. You don't want to compromise on profit, but you want your risk to go significantly down. Is it even possible to do it now? What you should do, I'm going to tell you what exactly is the trick. We're going to open option chain and we're going to do something which will really make sure that if markets start to trend, there is no problem. Or if we are holding it overnight, if market gives a 5% gap up, then also there is not much of an issue. Okay, so we're gonna do this. We look forward to buy a call and a put which is trading slightly less than 10 points. So wherever we see 10, we see here, we got to long it. So here we go, we're longing it now, and we'll see, is this adjustment going to relax you immediately, and why this adjustment is not common in public, right? That's why I say option trading is a really deep sea. Here we go. Now, remember I told you something. If markets start to go down, suppose market keep on going on the trend, what you see is that your profit is really gonna go up. Profit is going to increase with every passing point. This is what all of you want. Am I right? Now, what if market suddenly gives a gap up of 3%, right? That's a worse situation for you. There is not much of an issue, because now, as you can see, if market go fast down, that is your problem, right? That is the main concern. If market go fast down, then the call which you bought is gonna take care of you. Chances are that you may make money on a gap up as well. Now, what is the other possibility? That market stays where it is. If market stays where it is, there is no issue at all, okay? Because you moved your call up. If market stays in a 50-point range for 10 days, right? Let's think as negative as we can. There is no issue. There is nothing. There is, as you can see here, it's already in the green zone. Now, the last point is, what if market go up slightly, slowly, if market move up, then what you're going to do? If market goes slightly slowly up, then this hump which you see, this green hump, this is gonna lock in the profits for you. So in all scenario, gap down, no problem. Gap up, if market stays where it is. If market slowly go down, if market goes slowly up, if market stays what it is. This is called the real adjustments of Iron Fly, not the inferior adjustments which are popular in the market, right? You keep doing this, you try to make it loss free. No, if you try to make it loss free completely, then your profit potential is also going to go significantly down, and this is not what trading is all about. On this channel, you're not gonna get the easy going thing. There is a lot of intelligence have gone into this. How do we buy this? How do we adjust this? A lot of things. And now we have VIP points as well. Since you've been waiting for so long, so you should be rewarded now, right? So let me show you that. VIP points. Number 1, remember the adjustment rule. Adjustment rule is very simple. You can set an alert. Every broker gives you alert. As soon as your call or put reduces its value, go down 20%, then you look forward to do adjustment. Do not over adjust your Iron Fly. Please stop doing over adjustments in Iron Fly. It's not worth it. Okay, that is something which you must keep in mind. Remember, you break the rule, you pay the price, right? So that's how it is. When you buying hedges, when you buying the second adjustment, when you buying one call and one put below 10 rupee premium, then it has to be 10. If you make it 20-25, then it's gonna be an issue. But if you buy too expensive, then also, so got to stick to it. Profit locking, very important. Do not try to increase your profit when you're doing adjustment. You are doing adjustment because your main aim, your main goal is to lock in the profit. It's very rewarding, one of the best methods to adjust, right? And hard exits. You got to be crystal clear on your profit booking, crystal clear when you're booking, you exiting. If something go wrong, probably do not try to over adjust it. Take a 3% stop loss, right? You did your best to adjust your trade. If it's going out of control, you can always just do a hard exit, and then you can deploy the iron fly immediately the same minute. You can always do that. You can also wait a while. That's also you can do this. Now, very important point. Now, are you ready for this, right? Obviously, best things are safe for till the end, right? Avoid the adjustment near big events. This adjustment is really good, powerful, it relaxes you. That's nice. But if you're doing it near the event, near the big news in the market, right? Or American markets, Fed news, if you trade American markets, Fed event and all, don't do this adjustment. There are other adjustments which you can do. So remember, when you should not do this is also important. So in my opinion, 90% of the situations you definitely can. There is no much issue in this. It's all about improving your trading, going to the next level really fast. That's why I say hit and trial way of trading. High time, avoid hit and trial. Hit and trial cost a lot of money, a lot of adjustments. Plus, there is no surety that you're gonna reach the best adjustment. That's always the possibility. Elevate your trading game. If you think it's a craft, then you can improve it. All right, guys. So that's all for today. I hope you really enjoyed the video. I wish you all the best. And like I always say, that you're gonna do so well in your trading, you will surprise everyone. I wish you all the best. Bye.